The nasty NASDAQ is back at it again, but there could be good news coming right around the corner, according to historical trends that we can point out to you here in this video. Now, we're going to get into all of your Tesla stock news, what the data came in this morning, because holy moly, recession, where this data is really supporting us off landing at this point. What we're seeing in the treasury market also is supporting lower yields. Yields are actually falling today, and this is good news for your small cap stocks. For a stock like Tesla, this could really help fuel a rise in our markets. Now, I'm not suggesting this crash is over by any means. I think there could be a lot more downside to come, but in the short term, it looks more likely that we bounce after the last 2 days of, as I said, the nasty NASDAQ being nasty. Let's go ahead and get into all of this information. We have a lot to cover in a very short amount of time. Number one, hit that like button if you own Tesla stock, if you like Tesla stock, if you think Tesla is the best company you can invest in right now. As well as number two, subscribe to the channel. If you guys did not know, the best prescription for your complication is a subscription. Hit that subscribe button, as well as check out the links down below in the description of this video. If you guys would like to come get access to all of the trades that we are making live in real time, check that out. For anyone that is a part of the trading community, we have a course coming out. It's going to be sent out free 99 to everyone that is in the whale subscription of that course. You'll get that for free here in the next coming weeks. So check that out if you guys want to be a part of it. Let's go ahead and get into all of this information. So let's start off first things first with some of the option activity. As we said in the last video, I've never seen an over $4 billion day for Tesla options like you seen yesterday. Yesterday, you had 786 orders totaling $4.03 billion with a positive order value of 64%. Now, the majority of the dollars that went into Tesla options yesterday were bullish. That is great. But you did see a lot of big trades, like $100 million plus trades going into puts some of that downside protection. So as I said in the last video, it's not surprising that we're now down today. That's kind of what that data did suggest to us, even though the net of yesterday's option activity was positive for Tesla. Now today, you are seeing 678 orders totaling $199.6 million with a positive order value of 47%. So closer to neutral, but again, Tesla is down 2.5% today. This is just simply put due to fears in the broader markets. The data that came out today was exceptionally strong. Your GDP growth rate quarter over quarter came out at 4.9%. Wall Street was expecting 4.3%. So it came in hotter than expectations. Recession where? Durable goods orders came in even hotter than GDP growth rate at 4.7%. Your estimate was 1.7%. The economy is apparently red hot. It's actually re-accelerating is what this data looks like. Now, this data should have caused a rise in yields, but it's almost like the last couple of days we've seen yields go higher. The markets have said, hey, we've already priced this in. So maybe the markets over the past 2 days or so were even pricing in a 5+% reading for the GDP report. Sometimes in periods of uncertainty and fear in this market environment, good news is apparently bad news. Well, investors kind of priced in really bad news. So we still got bad news, which was a really hot GDP report, but it was not maybe as bad as what was priced in. So you're actually getting a drop in yields today. 30-year treasury yields down 8.5 basis points. 10-year treasury yields are down about 10 basis points. This is actually helping to put the Russell 2000 in green territory today. Yes, the Russell 2000 is green on the day here today. The NASDAQ, or at least at the time of recording this video, by the last couple of minutes of trading, you're going to get a big move heading into tomorrow. You have more economic data coming out tomorrow. So these numbers could be a little bit different by the time you guys see this video. but not a big deal. The Nasdaq is down 1.62%, S&P 500 down about 1%, and the Dow is down 0.52%. What is notable about today is, one, again, the Russell 2000 is slightly green, up 0.10%, but the VIX is up 4.31%. Earlier, just as I was collecting information for this video, the VIX was up over 7%. So you've really seen a rush to get some downside safety. The VIX measures the puts and calls on the S&P. So when the VIX is higher, there's more puts going on to the S&P that are being bought. When the VIX falls, there's more calls that are being bought. So today, well, there's a lot of puts that are being bought out there on the markets. People are pretty fearful, as what typically does happen if the Nasdaq falls almost 5% in the last 3-ish trading days. And let me just tell you right now, once this last round of trouble is done for the markets are going to soar. Take a listen at these numbers. Don't be political in your investing ideology. It's not going to make you money. Don't be political. But there's certain things that happen. For an example, if a current president runs for re-election, that's happened 5 times in history when there has been a recession within the last 2 years, or just call it a bad economy. Doesn't necessarily have to be a recession, but call it a bad economy. Only one president has ever won re-election for a second term in the last 120 years since 1900 if there has been a recession in the prior 2 years before that election. Now, today, Biden hails the hot GDP report, but voters don't see the rosy picture Wall Street does. Nearly half, 49% of the poll respondents said Republicans do a better job on the economy, compared to 28% who said Democrats do. Okay. The poll also found that a majority of voters disapproved of Biden's economic track record, 59% to 37% approving. What this tells you is currently the votes are not going Democrat, okay? People don't vote on policy. They vote on the economy. They vote on how they are doing in their personal finances. They don't vote based on what the GDP report was. So this is going to put a lot of pressure on the Fed to lower rates sooner than what we're expecting in 2024. That's the bottom line to it. And that matters to your money. Now, why I said the markets are going to rally higher, potentially much higher, and get a more inclusive rally, not just the top 10 or so stocks, your big tech stocks that have really led the rally, why I think everything's going to do well towards the end of this year, potentially at the very least the start of 2024, as long as we don't see some big recession that pops up out of nowhere. Take a look at this. I've already shared this with you guys, but I think it's important to understand. Your S&P 500 is the red line. Your S&P 600 and 400 are your green and blue lines. These are really your small cap stocks. For the last 20 plus years, small caps have traded at higher forward PEs than the S&P, than your larger cap companies. And they should, because you grow into your valuation. If you're a company that is, going to Mars, for an example, SpaceX, right? Call it a small cap company. It's not. It's worth like $200 billion. But if you have so much growth potential down the line, well, you can have a higher PE ratio because you will grow into that. An Apple can't have 100 PE ratio because it's not going to grow into that for a very long time. We can see kind of where the trajectory is going to be for Apple. So that's just, good information for you guys to know. Small caps should have higher PE multiples than S&P 500 companies. Well, it's not just the S&P, it's really just the top 10 stocks that have carried the valuation for the S&P. What you've seen over the last couple of days now, the last couple of weeks, is your big tech stocks are the ones that are really faltering here, whereas the rest of your markets never really recovered. So once you get that reset of your big tech stocks, then everything can start to make a healthier rally higher, and more than likely stocks that you're investing in, like a Tesla, are going to do better than the broader markets, and you could actually see double ups, triple ups in some of these stocks that have not participated in this market over the past 2 years or so. And I do think that will happen. If you take a gander here at what the markets are doing, Tesla's down 2.34%, Microsoft down 3.35%, Google is down 2.23% following yesterday's almost 10% down move. It's been a rough 2 days for Google McDougal. Meta is down almost 4%, Apple is down 2.34%. Again, whereas your Russell 2000 is slightly in the green. If you're an index investor, you're going to see more downside from here. That's my personal opinion. You could see quite the downside from here because it's controlled by these stocks that are here on screen. If you are an investor that is in beaten down dog companies, even a Tesla for that matter, it's still 50% off of all-time highs. You might not see as much downside over the next coming weeks as these big tech stocks are going to. Take a look at this fun little chart. This is going back for the history of the Russell 2000, the number of days since the last 52-week high. And as you can see, I mean, you're getting up there with historically one of the longest periods of time you have not hit a new 52-week high. The internet bubble is a little bit higher than us currently. It was about 550 days before you hit a new 52-week high. The global financial crisis was about 600 days before you hit a new 52-week high. And now you're sitting at about 500 days since you have hit a new 52-week high. This supports you probably should get a rally in your small cap stocks. Now, let's be honest as well. Small cap stocks, if you're a growth investor and the economy is maybe not growing a lot, they're going to outperform as well. If you get any remnants of a slowdown, a slight recession for 2024, small cap stocks are going to do well. Again, they grow into their valuations. So I do have a feeling here in the next 3 to 6 months, your portfolios, most of you guys invest in small cap, smaller cap companies, or even a Tesla that's sensitive to interest rates. Those portfolios you guys have are probably going to start looking a lot better within the next 3 to 6 months as the money really disperses from Apple, Microsoft, Meta to some degree, Nvidia to some degree, Google, and Amazon. You've seen it over the past couple of days now. The money is not rushing back into the markets when everyone is fearful. There's reasons to be fearful. There's a Middle East crisis that is going on. There's still higher inflation, good economic data leading to maybe no rate cuts in 2024 as per the market's current perceptions. Or if there is rate cuts, 1 to 2 rate cuts is all the Fed is expecting. That's not very exciting. I'll tell you right now, we're going to get more rate cuts than that. We're going to. At least that's my personal opinion. Now, this Middle East crisis is a bit of a doozy. Now, we have some news to go over with this, but I want to start before we even get into some of this news by saying when this invasion does happen of the Gaza Strip, you might actually see a rally in our markets. Kind of like the Russia-Ukraine thing. Markets did not like it at first, and it was more of a surprise. We've had kind of more time to like, hey, they've already been attacked. They're going in there. We've had more time to mentally prepare to this rather than just troops are building up and then one day, boom, they went into Ukraine, right? Little bit different how these things actually played out. Ukraine didn't attack Russia. We didn't have weeks to just anticipate the reaction from Russia, right? Big differences here. The markets have spent so much time being fearful over this situation. By the time it comes, you're probably going to get a rally in our markets because the markets hate uncertainty more than bad news. It's going to take some of that uncertainty away and transfer that into bad news, which the markets get over bad news very quickly. The question is, who responds to that? If Iran responds, if other Arab countries respond, if Hezbollah responds, if the U.S. responds militarily, yeah, that's where the situation could get worse. But if none of that happens, then it's not going to get worse. Now, a little bit of bad news on that note. The Iranian army, large-scale maneuvers of all formations of the ground forces will begin tomorrow. That's apparently what they said. Who knows exactly what that means, but it doesn't sound great. A senior member of the Hamas political bureau just took a visit to Moscow, not exactly sure what kind of implications this will have or what this is exactly for, but again, doesn't sound too great. This might actually be a little bit of good news. A senior Hamas official told the Associated Press on Thursday that the Palestinian militant group had expected stronger intervention from Hezbollah in its war with Israel, in a rare public appeal to its allies in the region. So they're not quite getting the support that they thought they would. I doubt it's going to happen if it hasn't happened now. The longer you can let your enemy prepare for your attack or for their attack is just not the best place to be in. That's why I'm kind of getting more bullish on this situation from an aspect of the markets, because theoretically, if the world knows, if Iran knows, if Hezbollah knows that the US told Israel to delay their invasion to get more striking capabilities in the region, to get more defense systems in the region, wouldn't it make sense for Iran or Hezbollah to attack now, or maybe to have already attacked before the US is more capable of supporting? Yeah, if it's not going to happen now, then I don't think there's going to be an intervention from Iran, Hezbollah, or anyone else, unless there were to be like something that was, a catastrophe that happened. Right, if you were to get something really bad that happened. But I'm getting more bullish on the situation in terms of a perspective as an investor in our markets. This is a crisis. This is a horrible situation. Hopefully it ends soon. Hopefully it's a short kind of thing and there needs not be any more loss of life. But as far as a market participant, the signs point towards we're almost over with this situation. And a spokesman for the Israeli Defense Force Brigadier General Daniel Hagari has just stated that a raid by the ground forces of the IDF is currently ongoing in the northern Gaza Strip. So you're already seeing this incursion into the Gaza Strip, but they're kind of just clearing a path to actually go into the city. It's not the full scale incursion or invasion yet. Now let's have a brief look at what TLT is doing today. TLT is up 1.26%. Again, 30, 20, 10-year yields are dropping today. That is good news. Theoretically, this really shouldn't have happened when that good economic data did come out. You're also seeing a drop in USO, down 2.21%. Let me tell you again, if this situation were to get worse, Iran would almost guaranteed tinker with the oil markets, right? They could cut off 20 to 30% of the world's oil supply if they wanted to. If people were really fearful of this conflict growing, you would see USO actually going higher today. That's not happening. The dollar is pretty flat on the day, up 0.12%, and gold is up 0.23%. A little bit of fear out there in the markets as to be expected, but just not anything that is too crazy. We were seeing 2-3% up days on gold. You're just not continuing to see that follow through. So a little bit of good news, little bit of bad news. All in all, I think there is more downside for the broader indexes, but I think if you are an individual stock picker, you're probably not heavily in these big tech names. So your portfolios, again, might see some recovery here once you get that final kind of blowout of the markets. Let's now get into all of your Tesla stock news you need to know today. And let's actually start with a little bit of Ford news. It looks like Ford is increasing the price of the F-150 Lightning for the 2024 model year by up to $9,600. And that is on the highest end variant. The lowest end variant is only seeing a $2,095 increase. This new UAW deal will cost Ford a lot, says Sawyer Merritt. Gains in the deal are valued at more than 4x the gains from the 2019 contract, more in base wage increases than Ford workers have received in the past 22 years. Starting wage rises by 68% to over $28 an hour. Top wage will rise by 33% to over $40 an hour. A 25% 25% rise in the base wage through April 2028. And the lowest paid workers at Ford will see a raise of more than 150% over the life of the agreement, with some workers receiving an immediate 85% increase immediately upon ratification. It also includes a historic right to strike over plant closures, a first for the union. All of this is really bad news for Ford, good news for Tesla. Ford, GM, Stellantis, at the end of these agreements, it's going to be very clear. They will not be able to compete on a mass market scale for EV market share against Tesla. Tesla supplier Syra expects more graphite buys ahead of China export ban. Australian producer Syra Resources on Thursday said it expects buyers outside of China to step up their purchases of natural graphite before stricter export controls on the battery material come into effect on December 1st. China, the world's largest graphite producer and exporter, will require export permits as of December 1st for some graphite products, including spherical graphite used by electric vehicle makers. LG Energy has decided to utilize its new Arizona factory as the primary production hub for the 4680 series battery. The company also unveiled detailed production plans for the budget-friendly product line, including the LFP by 2026 and the lithium manganese iron phosphate LMFP and manganese rich batteries by 2027. The company plans to start mass production of the 4680 battery by the end of 2025. And new Model 3 deliveries officially begin in China tomorrow. The Tesla Model Y finished September as Europe's top-selling car overall, earning the honor for the 6th time in 9 months. An oil giant, BP, is going to buy $100 million of superchargers from Tesla as early as 2024. Tesla chargers will be installed across the BP Pulse network, including at key BP, Aramco, AMPM, and Thornton's branded sites, Travel Centers of America locations, and at BP Pulse large-scale gigahubs. Charging sites near airports and in major metropolitan areas across the U.S. Tesla is going to significantly expand Northern Ireland's presence with new Belfast base, and that actually looks pretty dang cool. And it says the Tesla Service Center opened in the former Trust Ford site on the Boucher Road in August 2020, creating 15 jobs. It's thought the new larger site just across the Boucher Road will replace the existing center. Fabian Abert said he just picked up his Tesla Model 3 Highland, one of the first in the Netherlands. And Lucid is seeing more troubles. Their Lucid Air is now being recalled over faulty software in rear seat heaters that could burn passengers. Now, today in After Hours, the story is not done for your big tech names. Amazon is going to be reporting earnings. That's going to be a big one, especially to gauge the consumer. Enphase, Intel, Ford, Chipotle, Dexcom, Skechers, United States Steel, Capital One, and Vail will be reporting earnings. Tomorrow, you're going to get a lot of energy companies as well as AbbVie, ExxonMobil, Chevron, Charter, Phillips 66, AutoNation, Colgate, Newell, and T. Rowe Price that report earnings, but these are not market drivers. Tesla on the charts, again, like we said previously, got rejected at that 200-day moving average that was yesterday. Now, you're still off of your low, which was at $202.51. For comparison, if you look at the NASDAQ today is hitting a new low that you have not seen since back here in May. So apples for apples, Tesla is actually holding up better than the broader NASDAQ index itself. That, I think, is pretty impressive. Again, a number one reason why I would say this is happening is because even though Tesla reported not so great numbers, they're still growing at impressive rates, especially their deliveries grew over 35% year over year. But you've basically got through all of the rate hikes. It doesn't look like we're going to get any more rate hikes, even with this strong economic data. So the next route for Fed funds rates is lower, and Tesla, well, it hurt Tesla on the way up with Fed funds rates. It's going to benefit Tesla on the way down once the Fed does start to cut rates. So that has been a net drag to Tesla's business over the last almost 2 years now, the Fed raising rates. When the Fed cuts rates, it's going to help Tesla directly. It's going to be one of the biggest beneficiaries of the Fed raising rates pretty much instantaneously. So that is going to do it for this video. I will see you guys back here at 9 p.m. tonight to go over everything else you need to know that is happening with Tesla as well as the broader markets, and also the economic data coming out tomorrow. The economic data tomorrow will also be very important for our markets. Hit the like button, subscribe to the channel, let me know what you guys think about this information down below in the comment section. And again, if you guys want to come join the trading group, the trading community of over 60 members now, link down below in the description of this video. Thank you for watching, enjoy the rest of your day, and I will see you in the next one.